Hi, my name is Darren Coleman, Senior Vice President and Portfolio Manager with Raymond James in Toronto. Welcome back to another episode of, we're not sure what to call this yet. Maybe it's Cribs Home Edition or something like that. Or what room are you in? Um, or what does your ceiling fixture look like? I love how everyone has their computers. Paul, thank goodness you've got yours lined up really well. Today, I'm delighted to be joined by Paul Allison, President and CEO of Raymond James Canada. So, Paul, thank you for taking some time to join us today. I know you're busy. You're up in the captain's lounge. You're coming back from the cockpit to talk to us in the back here and share a little bit about how we're dealing with all this stuff. And I thought before we begin getting into kind of what the firm's been doing, I thought it might be wise to just explain to clients who may not know just how big Raymond James is. I think it's a far more substantial organization than most people think it is or are aware that it is. And then we can talk about how the strength of the organization is actually helping us quite a bit through this corona crisis pandemic situation we're all finding ourselves in.
Thanks, Darren, and thanks for inviting me on. It's great to have a chance to have a discussion around what's going on, and thank you for taking the initiative of including me. Raymond James has been in business for 58 years. There is approximately 16,000 people in the firm working on 3 different continents. Our primary business is the business of the financial well-being of our clients, our wealth management business. 2/3 of our business operations are invested in the business of managing clients' affairs, and Darren, your own business is directly aligned with that. The firm has about 16,000 people globally, close to $1 trillion US of assets, of clients' assets within the organization, and we pride ourselves as being a conservative company. In fact, 11 years ago when I joined the firm, we had no debt in our capital structure. It was entirely an equity capitalized firm, which goes to the very conservative nature, and that's been the hallmark of our business. If you go back to the 2008-2009 financial crisis, we didn't take any money from governments during that very difficult time. In fact, we made money every quarter, which speaks to the very conservative, well-capitalized balance sheet that we have today. So today we have about $1.5 billion US of cash on our balance sheet, an undrawn revolver for another $500,000, and we just yesterday did a financing to raise an additional $500 million. So we have about $2.5 billion US of liquidity on our balance sheet to really to manage almost anything the market could throw at us here, and to make sure that we're in business to look after our clients. So I would say to your audience, they should feel very, very comfortable with the financial strength of our organization.
Yeah, Warren Buffett often talks about, finding those rare businesses that have fortress-like balance sheets, right? That are so strong they can withstand almost any storm. And it sounds that's very much like what Raymond James has done almost its entire history, is make sure that the firm itself is in remarkably good financial health.
I would say that's true, Darren. And when markets are good and we're not faced with these very uncertain, we often get criticized for having too much cash on our balance sheet.
Right.
However, it's our nature to prepare, like good Boy Scouts or Girl Scouts, to prepare for things that could happen. Nobody has a crystal ball. Nobody knows what the future holds for us. But our business is built with a very thick armor to survive downturns. And that is the classic Raymond James response, is we're very, very well capitalized and will be profitable, I'm highly certain, through this time period, and come out of this when it does resolve itself in even stronger financial strength.
And I think one of the benefits of that is not only is the firm able to withstand this, but it's also able to move very swiftly. So one of the things that I know our team has been able to benefit from is the degree to which we could roll out remote access for my team to stay fully operational. That's actually been quite the operation across the firm, hasn't it, to do that?
Yeah, the technology response has been very impressive. And as you know from the many times we've had these types of discussions as a team, we invest an awful lot in cybersecurity. So when you go remote, you have to make sure your cybersecurity tools are as robust as can possibly be the case. We spend $35 million a year purely protecting our clients' information. That allows us to flip the remote switch with high confidence that we can begin to engage interactively through different means, technology, the internet, over the phones and phone lines and airwaves, and know that our clients are well protected and their financial information is well protected and our conversations are well protected.
Right. No, that's very, very important. And so as a result of that, even though like I'm in my office now because there's more social distancing for me here than at home with my teenagers who are burning up my Wi-Fi, even though basically all our offices and actually the office towers are all empty, which is really weird in Toronto, we're still able to operate as a firm at pretty much full capacity. It's incredible we can do that.
It is, and in fact, parts of our business are doing very well, as much as we've seen asset levels reflect, kind of the correction in the marketplace. The trading activity has increased significantly. There's a lot more trading. Our trading turrets and our trading capabilities has been able to stay in step with that activity. And that activity, whether it's on the institutional business or in our mainline private client business, the increased trading activity has been a positive in terms of keeping clients in and the market's open to make sure clients can make decisions and good advice from their financial advisors.
So I wanted to now move to the other job you have, apart from being Rose's husband, which is the most important job I know, and being grandpa. The other big job you have is you're actually now the head of IROC, which is the basically the regulatory self-regulatory organization that all the investment dealers in Canada belong to. So along with running our ship, you've got to look after, you're kind of the admiral for the whole Navy in Canada. So from that perspective, what are you kind of seeing the Canadian investment industry doing to respond to this? Because 2008 was unique. This is not like that, but it's still a remarkable time we're in. So how are all of the other firms handling this? Are most of them in good shape, or some of them struggling? Like, what's your sense of it?
It's a great question, and I don't have a lot of data on individual firms. We have heard some of the larger firms, when they immediately went remote, did not have enough portals to connect from a remote work site. So the larger firms, that would be a big commitment for them to be able to go remote, and we've heard some of them have had to go to shift work in order to allow certain people on the remote connectivity, and they rotate off and others rotate on. But I would say by and large, the Canadian industry is actually doing well. The focus at IIROC, and thank you for asking the question, has really been the integrity of the capital markets and keeping markets open to allow for the natural adjustment. And as you might recall, back in 9/11, 2001, the markets did close because the downtown core in New York was hit significantly. People could not get into work. They had to close the markets. And thankfully, at this juncture with this pandemic, there's been no closure of the market. So a fully functioning market. And in fact, there are clients in the market raising capital. There is M&A transactions going on, and there's portfolio managers like yourself that may be using these opportunities to adjust portfolios and or look for opportunities to really improve the outcome for your clients. So the focus at IIROC, and just to give you one example about the volume of activity. So in our market surveillance system at IIROC, which we're responsible for surveilling all of the markets, both bond and equity markets, we get about 350 million messages a day. So just think of that number, 350 million.
Well, I get about half of that on my cell phone, I think. So
yeah, the peak we had in terms of messages was about a week and a half ago, where 1.4 billion messages were sent into market surveillance. And the market surveillance, the integrity of the technology in the market surveillance system was able to withstand $1.4 billion or billion messages.
Wow.
So it's a very robust system, and I think Canadians should feel proud of the fact that the oversight of the markets is so well managed. Secondly, IIROC, much like Raymond James, has gone to 100% remote. So these are people that are surveilling markets, which requires a lot of technology, and yet they're doing it remotely. So it's really been an amazing, been amazing to watch. And as a Canadian practicing in the capital markets and having exposure to these markets, I feel very confident about the integrity and the expertise we have in Canada, and we should all remember that as one of the strengths as we come through this.
Yeah, and particularly with, as you mentioned, that the volume of transactions is wild. We've also seen the market go through circuit breakers, for example, things like that were put in place after 2008 that have never been tripped before. So along with all of this being new to everybody, we have systems that have never actually experienced this in terms of volume and movement. So in the midst of all that, nothing broke, which is an incredible thing, right? Nothing broke.
Yeah, and I think you're quite right. It was 20 years ago during the 9/11 that they introduced circuit breakers following that event, and
Yeah.
they've performed very well. It's been a very effective technique to just manage the violent swings and the short-term swings, and the circuit breakers kick in, things readjust, and then they allow the market to open up again.
Yeah, give everyone a chance to take a breather. Okay.
Yeah.
Paul, I know you've got to get back to a bunch of things. Is there any kind of last thoughts you'd have or advice to clients or just investors at large as we go through what is truly a historic time?
Well, I think what I would say is, and I'm a client of the firm as well as being in the position I have, is people need advice. These are unprecedented times. And I think they need advice because they need to take emotion out of their own decisions. If they look at the market or look at their portfolio and then react emotionally, that is often a wrong outcome. And so having somebody providing them advice, a financial advisor who can depersonalize the advice, is incredibly important. And if I look at my own situation and my times I've relied on my advisor, I don't always agree with my advisor, but I always listen to my advisor because I know he or she is making advice that's in the interest of me and my family. So great conversations. Not all the conversations we have are about the investing. Oftentimes, it can be about other things. How are things with your family? Do you have loved ones that are shut in? And so the whole holistic discussion you can have with a financial advisor, I think, is a great opportunity and a bit of a stress reliever for many people, that they have somebody caring about them, that they can phone, who knows their personal circumstances and has their best interests in mind, to provide the client with the help they need. And oftentimes it's just listening, even if the advisor isn't providing any feedback, being there to listen to clients and to hear their worries and to hear their stresses and to stay on a plan. Because the best time to plant a tree or to make a plan is yesterday. And if you haven't got one in place, then make one today and stick to that plan. And that will be the best advice I would have for people, is take a long-term approach. We will get through this. I've been in the business 35 years. I've seen several market disruptions, beginning in 1987 with the market crash. And every time we've recovered and gone to new highs, this will be the same, in my opinion. We will recover from this and go onward. And so I think having an advisor that can help you through these difficult times, even by listening, is what I would suggest clients do in this time, and rely on their advisor who knows them well. It's all about a life well planned. That's our tagline, and that is exactly what we're recommending to clients.
Brilliant. Paul, thank you very much. One thing I'll tell clients I've always enjoyed about being here, because it's Pedro and I are coming up on like 8 years almost soon. And I spent 20 years at the big bank firms. And the one thing I've always enjoyed about Raymond James, and you particularly, is the incredibly great access and relationship we have with executive management. You've always made yourself available, and I do appreciate that. And on behalf of all of our clients and our friends, I want to thank you for taking some time today. I really appreciate it. So, okay, Captain, my captain, get back in the cockpit. Make sure we land safely. Be well, stay safe, which is like 6 feet, or in Canadian, that's one poke check with a hockey stick. That's the distance.
Great, Darren. Thanks very much.
Take care. Bye-bye.